Welcome back to another installment of the Money Codes. My name is Joel. Today we're going to go over CreditStrong, which is a credit building platform. And I want to take just a couple of minutes to kind of break down the good, the bad, and the ugly about CreditStrong and whether or not you actually need it or not. All right, so welcome back. So, like I said before, we're going to talk about CreditStrong, which is relatively new in the space of credit building, improving your credit score. They're kind of new on the scene. Alongside with some other fintech companies, you're seeing more and more lately. Some new companies are popping up on the scene for the sole purpose of improving people's credit scores and making their credit profiles a bit stronger. So we're going to go over Credit Strong and my thoughts on it. Should you get it? Is it something right for you? So first and foremost, what is Credit Strong? I want you to look at them as an installment loan plus a savings account kind of rolled in one. Right, an installment loan plus savings account. So they're backed by Austin Capital Bank, and they report as an installment loan and not a revolving account. A revolving account is like your credit card. You swipe, you increase the balance, you pay it down. So that means if you have a revolving credit card account, month to month, your balance and how much you're paying down on that balance, it changes. It fluctuates from month to month. An installment loan is a set amount. Another example would be if you go to an auto dealership and you get a car loan, you get a loan for $20,000. They say your payment is $250 a month. You already know every month you're paying the exact same amount and it reports as an installment. So keep that in mind. Another interesting thing about Credit Strong is that they do not require an upfront deposit. And you can compare that to a secured credit card. So, for example, again, if you're going to a Bank of America, Capital One, if your credit is not strong enough, if you don't have a credit score that's good enough, they're going to require you to put down $500 or $1,000 to secure that credit card in order to open up that account. With companies like Credit Strong and Self, for example, I have another video on them. You don't need to put down a large down payment in order to create an account. So that's a benefit that I like from them. We already know that if you have multiple hard inquiries, that's actually, I believe, 10% of what FICO actually looks at when they're creating your score. If you have too many hard inquiries, it looks like you're desperate for building accounts. It looks like you're being a little bit too greedy, too eager to get accounts, and that actually can hit your score. It can ding your score and actually make it go lower if you have too many hard inquiries. So with Credit Strong, you're able to open up the account without having to get a hard inquiry. That to me, I think that's advantageous. Any other credit card account, they're going to hit you with a hard inquiry. So they're pretty easy to start off with. Once we go on the website, I'm going to show you that they actually allow you to select the plan that you want. So it ranges from the amount of the installment loan and the monthly payment. But if it turns out that this is something that you don't want to go forward with after a couple of months, there is no prepayment penalty, and finally there is no credit check. So this is probably the main reason why I'm even making this video. Is when I'm on YouTube, when I'm on Instagram, I'm seeing everyone give their own strategies as far as what you need to have in order to build your credit score. Um, some good information is out there, but I'm also noticing some misinformation being sprinkled in as well. I do recommend Credit Strong. I've actually been with them for about 8 months. But after you see this video and after you weigh the pros and the cons, I think you're going to see why I do recommend them and why I'm continually paying and subscribe to this type of account. Again, you can't really beat it when you have no hard inquiry, when you have no credit check, when you have it being reported as an installment loan. So you're actually boosting your credit score by having a credit mix. And we can touch on this very briefly here. So, why you should consider it. So, by looking at this quick little graph here, you're going to see that 35% of what makes your credit score is payment history. This is usually what most people talk about, and it's true. You want to have a good credit score. Paying on time is going to be the biggest thing that actually propels you to that good credit score. But that's not the only thing that we need to be paying attention to. Also, look at amounts owed, which is your utilization, new credit, like I said before, with hard inquiries. If you keep getting hard inquiries, which depicts that you're actually getting new accounts over and over again, it doesn't look good. But pay attention to this right here, credit mix. Credit mix. Even though it's only 10% and it's showing it's less influential, it's still a category that impacts your credit. And credit mix means the types of accounts that you have on your credit profile. Do you only have credit cards? Do you only have store cards like Victoria's Secrets or Best Buy or, one of those like the mall type of cards? Is that the only type of accounts that you have? What lenders like to look at is that you're savvy enough to have several different types of accounts that's reporting to your credit profile. So why do I have this here? Your credit mix. When you have something like a CreditStrong, not only are you going to be building up your payment history by paying every single month, but because you're adding an installment loan as opposed to just getting secured cards over and over, you're actually boosting up your credit mix. So there's an extra 10% that you're tapping into to improve your credit score. Okay, so I put here there's no such thing as one size fits all strategy. That is very true. When we do our consultations, everyone comes to us with the different things on their credit profile. Some people don't have anything on their credit profile at all. They're just very young. They're starting to build their credit. Some people have history, but they have tons of collections. They have tons of charge-offs. Their utilization is, just is too high. So for one person to just be able to give you a solution to solve your credit problem, it's not being forthcoming. They're not being all the way 100 with you because one person may be able to implement a strategy for their credit profile and they can get 100 points, 150 points within a matter of months, which I have seen personally people do that with CreditStrong. And some people may only get 15, 20 points just because their credit profile, what actually creates and makes up their credit profile, is so drastically different that there is really no one size fits all. But if you do have a thin credit profile, which I'm going to go into, this is something that I do recommend for you guys. Okay, so before I go to the next slide, I have here in the notes to think like a lender. This is also one of the other reasons why I created not only this video but this channel. Is I think sometimes we're a bit too preoccupied and too fixated on what our credit score is, what our FICO is, just that 3-digit number, when in actuality we need to be paying attention to what lenders are paying attention to when they make a decision on whether or not they're going to give you a loan. If you're able to understand these concepts that I'm actually going to be going over, and I'm using CreditStrong as the subject matter, but I'm giving you a lot of gems in this video, and I want you guys to pay attention to, is if you're able to make your credit profile in a manner that once an underwriter sees it or an underwriting software looks at it, that you are strategically placed, meaning that you have your installment loans, you have your revolving accounts, you have your utilization under the right percentages, that you're able to get loans, you're able to get creative financing for your businesses, you're able to get the best interest rates for your home loans and your car loans. You got to think like a lender because they're not just only paying attention to your credit score. You can actually have a credit score of 720, 740 and still get declined if you're trying to buy a home. And I want to say that again, you can have a 700 plus credit score and still be declined if you try to get a home loan, a auto loan. You're trying to get a loan for your business. Why? Because if the only thing you have on your credit profile are very basic store cards, or you do things like the shopping cart trick, they're not going to give you 30, 40, $50,000 when the only thing that you have shown is that you're able to pay $20 a month on a Best Buy card. So we actually have to make our credit profile look strong enough so that once a lender looks at us, they know that we're savvy and they know that we're able to handle bigger types of responsibilities by what we're doing here now. And I'm going to show you why CreditStrong is one of the reasons and the options that you may want to consider looking at. It may not be for you if. So just like I said before in the previous slides, not every solution is for everybody. It's not. Who wouldn't I recommend CreditStrong for? So if you're somebody that you already have a couple of installment loans reporting positively already, and the key word here is positively. So that means, let's say you have a car loan, let's say you have a loan from your bank or your credit union, you have your home loan, you're paying on time. You really don't need to have an additional installment loan just for the fun of it. If you already have a few positive installment loans reporting, then I will probably say don't worry about CreditStrong. Don't worry about self. Just focus on building up your credit cards, getting some credit limit increases. There are other things that you can do to strengthen your credit score and your credit profile. But if you have this already, then I will say probably just hold off on this. You really don't need this. Uh, Okay, guys, I had to edit that second bullet point here just to make it a little bit more simple. So here I have it saying you have an installment loan that is less than 24 months, and I have parentheses FICO. So this is a bit advanced, but if you have an installment loan that is less than 24 months, so let's say you got a car loan a year ago. Let's say you have a loan from your bank, your credit union, 6 months ago. That's good. We want that. I'm not going to show you the charts, and I'll likely do another video that specifically goes over the way FICO weighs out our positive payment histories. But I can actually prove to you that if you have an installment loan, let's say you have an installment loan for 5 years, the first 2 years is where you're getting the bulk and the majority of the positive points for having that account. This is also a reason why you may have noticed, let's say you had a car note and you paid off that car note, and ask someone, if you haven't personally done this, but ask someone who just recently paid off their car note. 9 times out of 10, you're going to see that their score is going to go down. It's kind of counterintuitive. So trust me on this. This is going to be a video that I'm going to make just separately, but FICO and the credit reporting agencies, they like to see payment history, and they like to see a specific type of payment history. So if you have an installment loan that is 24 months or newer, that's great. I would still say hold off on this. If you have an installment loan that's 3, 4, 5 years old and you're still paying on it, I would recommend that you do a refinance on that, or you get a new type of installment loan. And what you're going to find that's very interesting is that you're going to see an additional credit increase if you are able to keep your installment loans within 24 months or newer. Again, this is kind of advanced, but just take my word on that. Just trust me on this. And if you have a 740 credit score, but not just a thin profile score, but a 740 score, meaning you have 3 to 5 revolving credit cards, you have 1 or 2 installment loans, you have a credit mix, you have age on your history. If you have a solid credit profile already, that will probably be another reason why I say CreditStrong may not be for you. There are other things that you can do that would benefit you just a bit more. So I have versus self-lender. Self-lender is something that is very similar to this. They're different companies, but they are both credit building installment loan type of companies made to help people improve their credit scores. The main difference that I would prefer, and I would say pick one or the other. The main reason why I would prefer CreditStrong is the maximum amount of the installment loan can be higher than what I've seen on self-lender. And the main reason why you would want this, if you're able to show a 20,000 or a 10,000 installment that you're paying every single month on from a CreditStrong, and a lender looks at that, they're going to look at that person. They're looking at that person as someone who is responsible enough to be able to pay and take care of a $10,000, $20,000 plus installment loan. What I've seen from self-lender is that their installment loans are a little bit lower. CreditStrong, I will push more for if you're going to make a big purchase, if you're looking to get some business funding later on and you need to show a larger installment loan, CreditStrong will probably be my recommendation. Self-lender, if you just want something that's a bit lower for monthly payments. It's a lot easier for someone who's younger, who doesn't have the budget. Self-lender may be an easier point of access versus revolving credit cards. I mentioned this before. Self-lenders in your credit strongs are going to report as installment loans. They are not reporting as revolving credit. So if you want that 10% mix, you're going to need both. This isn't a case of should I get a credit card or should I get an installment loan? You need both. You need that mix. Credit Strong versus secured credit cards. Credit Strong, you don't need a large down payment. A secured credit card, you're going to need a minimum of $3, $5, or even $1,000 to be able to secure a secured credit card. So the point of entry for something like a Credit Strong versus a secured credit card is a bit better for companies like Self-Lender and CreditStrong. Now, I'm glad I put this here in my notes because I don't hear people talking about this a lot. I have a video about the shopping cart trick and it has its advantages, but store cards like your Victoria's Secrets, like your Express, like your GameStop, like your New York and Co., they don't hold a lot of weight when it comes to the eyes of a lender. So if you're trying to get a mortgage and the only thing you have are store cards that you got from the shopping cart trick, you're going to just look like an inexperienced consumer versus a savvy borrower. You want to have something that has some weight to it. Installment loans have that. Unsecured credit cards from the five major banks, Citi, Bank of America, Wells, Chase, companies like that, they hold more weight. Store cards from the shopping cart trick, they're good if you have really no other option. But you want to set your goal at not just having random cards. You want to strategically create accounts on your credit profile that makes you look like a rock star in the eyes of a lender. You don't want to have accounts just to have accounts. All right, so that's the difference between Credit Strong and store cards. Store cards are just they're very basic, and I really only recommend that trick and that strategy if you just got out of bankruptcy or if you're somebody that really doesn't have any options. The shopping cart trick does work. And finally, authorized user accounts. You are able to see a credit score increase if you're able to get authorized user accounts placed on your credit profile. But again, in this day and age, underwriters, they're not stupid. They're not dumb. It's very easy for them to look at your credit profile and before they approve you on whether or not you're going to get that loan, it's very easy for them to tell this person just got an authorized user account. So you're not going to trick anyone from getting loans by putting AUs on your account. It's just not going to happen. It's not. So this is another reason why, and I'm giving you a lot of gems. This is another reason why when you go on YouTube, when you go on social media, and people are just doing backflips over AU accounts, you're able to get credit point increases, yes. Ask those people, those same people that are hustling this, ask them, what kind of credit funding, what kind of loans were you able to get because of those AU accounts. And I'm going to guarantee you, you're not going to get a lot of information back from those guys. You're just not. All right. So everything on this list isn't bad, but if you don't know how to use it, you're going to waste your money and you're going to waste your time. And you're going to look like a rookie in the eyes of a lender. All right, so people who have used CreditStrong. So I have seen people get CreditStrong accounts and get over 120 point increases. I have seen that. Is that going to happen for everybody? No, it's not, because if you have high utilization on your credit card accounts currently, if you have too many derogatories on your account currently, if you have bad payment history on the accounts that you do have, and it's reporting negatively, there are too many things that are going to weigh you down. If you have nothing, if you just got out of a bankruptcy, if you're a young college student, if you're somebody who just paid cash their entire lives, but now you're just now coming to the understanding that you do need to have a credit profile and credit history, we have seen those people, once they are able to add installment loans and certain credit accounts, that they're able to see 100 point increases like that within a matter of months. That does happen. But again, be realistic with what it is that you have, what's currently reporting on your credit profile. That way you can understand realistically what you can expect to get by adding these accounts. Okay, so I'm back on the website for CreditStrong and Self. And if you made it this far into the video, shouts out to you, because I know this is a lot of information, but I'm trying to over deliver when it comes to providing just good content and content that you won't be able to get from most channels. But I picked up on something that was pretty interesting when I was going on to the website. I wanted to just show you the pricing comparison between CreditStrong and Self, and I noticed some differences from the last time I went to the site. As I told you before, I'm an account holder for both companies, but I noticed CreditStrong, they changed their pricing a little bit. So I want to do a quick side by side, and I want to show you what's actually on my credit report as it pertains to CreditStrong and Self. So remember what I said earlier. You know what? Let's pull that up here. I wonder if I can do a side by side. Yeah, let's do this. Nah, that won't work. Okay. I'll come back to this later. So remember when I said earlier, the advice I gave you was for Self. Self would be a company that I would use. They are relatively inexpensive. We can look at the pricing here, and you can see 25 is their least expensive. You have 35, and it's 24 months. And then you go to the $48 a month. It goes 12 months, and then $150, still 12 months, and then you have a credit history of $1,600, which is not bad. It's not bad, but let's go ahead and contrast that with CreditStrong. And again, as I was saying, they changed the pricing up quite a bit. They rearranged some things. So not only is CreditStrong a bit cheaper when it comes to the monthly payment, especially for the lower tier. I'm liking how they're doing the reporting of the installment balance. Notice CreditStrong has $15 a month for $1,000 being reported, and on Self, it's saying a credit history of 520 after 24 months. And that got me to thinking, I'm saying, well, when I first signed up for CreditStrong, their plans were a bit different. I actually signed up for their Magnum plan that's no longer being offered. So when I signed up, this was 7 months ago, 8 months, I think. I got CreditStrong second, and I got Self first, just because I wanted to do a comparison for these type of videos. So now CreditStrong, right now, it's looking like the highest that they have is the Magnum 10,000 for $110 a month to have 10,000 being reported, which is great. This is awesome. The lenders, the whole psychology behind this was you want to have your credit profile look like you're a professional borrower and not just someone who is just an amateur consumer who only has things like store cards. So if you are having a $10,000 installment shown on your account, when I signed up with Credit Strong, there was actually a tier higher than this. And I would be interested in seeing if I could call them about this to get more information. But the plan that I'm currently on, and this is where I'm going to show you. This is my screenshot of my credit profile. Of course, it's not my entire credit profile, but just two accounts. And on the top, you can see Austin Capital Bank, Credit Strong. And I want you to pay attention to a couple of things here. Lead bank is self. So you see that the account type, they're both being reported as secure loans. Secure loans. So they're both showing as installment, which is fine. They're both showing that they're in exceptional standing, payment history. Haven't been late on either one. But notice the loan amount here. I'm paying $200 a month for this plan for Credit Strong for them to report an $18,000 installment. But if I go back to their website, the highest that they go is 10,000. And even still, even if you don't want to go here, because I would only recommend this tier if you are like, yeah, even this right here, report the largest installment account possible. So you can see here that they are categorizing their plans based off of the need. And if you're somebody that is looking to be an entrepreneur, go to banks and start looking for, and you're looking for some considerable amounts in funding, this is why you would want to have $10,000 being reported as an installment, as opposed to 1,000 or any other amount. So remember the key phrase that I was saying earlier, think like a lender. Think like a lender. It's not just about payment history. If it was only about payment history, you wouldn't need you wouldn't need any of these additional options. You wouldn't have so many different options if the payment history was the only thing that matters. There are other factors at play. So the reason why I'm showing you all this is, number one, I want to be as transparent as possible. I want to show you how it reflects on my credit report. I want to show you that Credit Strong, they are updating their website, they're updating their plans, and that goes for any account that you're going to. Any of the recommendations you get from this channel, or you get from any YouTuber for that matter, you got to check back every couple of months because they're always changing something. They're competing with one another. So just make sure you're staying on top of what's here. But based off of the information that I'm seeing here, I'm siding more with Credit Strong for both. I'm citing more for Credit Strong for not only because they're able to report a higher installment if you go for that Magnum plan. And again, I'm not telling you to spend $110 or for myself spend double that amount to get a $20,000, or excuse me, I think it was what, 18,000. 18,000. I'm not telling you to spend that amount of money, but if you know what you're doing and you're coming in here with a game plan to optimize your credit profile to the best that it can be. That's the reason why I actually went ahead and got this 18,000. And also, I'm not going to go ahead and pay into this because remember, this is just a savings anyway. At any given time, I can go ahead and call either one of these companies, cancel, get the money that I paid in minus the admin fees and whatever, company fees that they have. But I don't need to pay this entire 18,000. I just need to pay basically 24 months and then I can cancel this and just rinse and repeat. That was the advanced strategy that I mentioned before. So in conclusion, I'm really liking Credit Strong because not only are they able to give you and offer you competitive pricing when it comes to the payments. So you're $15 a month versus 25. So the monthly payment can go a bit cheaper with Credit Strong. But if you're someone like me and you know what you're doing and you want to have the highest amount reported and you go with the Magnum, you can have that as well. You can have a $10,000 installment account reported versus Self, which is only going to show 1,600. So I thought that was pretty interesting. So again, I'm going to conclude this video. It's been super long, but I want to show you everything. I just don't want to just read off the website to you and just be a salesman. I want to show you my credit report. I want to show you the changes that I've seen over the past 6 to 8 months that I've been looking at both of these companies. I want to give you guys as much content as possible. And if this has been helpful, you already know what to do. Please like and subscribe. Please go in the comment as well for those who have either one of these companies. Let me know what's going on with your experience with both companies. But yeah, that's pretty much the end of my video. I'm voting CreditStrong here just based off the information as of today. So I appreciate you guys watching. Go ahead and like and subscribe. And I'm going to catch you on the next video. Peace.